Stocks broke April 4th lows, and could be important development. I'll explain what I mean. Junk debt high-yield bonds are attempting to bottom at a logical level. Dollar rallied strongly, while gold also printed a topping candle. Which one is correct? And is the correlation and relationship between gold and dollar is still going to hold? And we'll look at oil. Could we be about to experience buy the rumor, sell the news in regards to tensions in the Middle East? Let's find out. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, April 12th, 2024. As always, please remember to hit the like button, subscribe to this channel, share this video, and ask any questions in the comments section. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com market indicators, trading indicators, which you can find out more about by going to the description in the video. You can also see that I have, you can sign up on my site once you are ready. All right, so let's first look at sort of a zoomed in version of S&P 500. So what we're looking at right now is simply a zoomed in chart of SPX on daily time frame. So 1 day's worth of activity is each candlestick. And here's what I wanted to point out on this chart. So number one, this is the highest high ever reached so far in this world, 28th of March 2024. S&P 500 hit 5264.85. Okay. Since then, this is March 28th. Since then, we basically have been trading sideways to strongly down, and I'm referring to this particular candle on 4th of April, last Thursday. I highlighted this candlestick last Friday, and this is a bearish engulfing pattern. So it's engulfing, this red candlestick is fully engulfing the previous candlestick that was printed on the 3rd of April. Usually these types of patterns are by definition bearish, especially if they're at the top of the range. Definitely we're at the top of the range because these are all-time highs. So notice what happened this week. Several times, to be exact twice, on 10th of April and then again on 11th of April, the Thursday, so Wednesday and Thursday of this week, the price tried to break down below this close and low, because they're basically the same thing. The close was at 5147.21, the low was what, 5146, so it's basically the same thing. So so far on Wednesday and Thursday it failed to break below those levels. However, today on Friday clearly we had a close below those levels, so that's why I'm saying the support break did occur in regards to this last Thursday's candlestick. So the door is now wide open to for S&P 500 to continue moving lower towards the green support resistance line. We can also turn on exponential moving average. For example, we can change it to 50-day exponential moving average, and we're approaching that 50-day moving average levels. So either way you look at it, we can look at it from a point of view of my indicators, which provide convenient levels. We can also look at it from point of view of moving average, which provides what many people are using. Either way, we're approaching those levels, and quite often after such a giant advance, a pullback of such a small magnitude will be bought. So what I'm expecting is at least a bounce in the near term right around the green line. Again, you can find out more about this at my website. How fast are we gonna come down towards those levels? You know, it could be very fast, because like look at the size of this candle. What is it? It's about like 2% or so. So we're not even we're like 1.25% away from the green line, and this is going to be the first test of this gigantic move that we experienced since October, November of last year. Quite often this level will hold, and we will at least get a bounce towards the record highs. So other how do I call it? Other forms of other indicators that I watch, for example, market breadth, oversold, overbought indicators, are already starting to point to the fact that we're slightly oversold. And in an uptrend, even slightly oversold is a recipe for more buying, basically. So at this point, we're looking at this, pullback as a normal occurrence, and we're just waiting for it to be over. So for me personally, I don't get terribly excited about stocks coming down towards this green line, towards the green line. I get quite excited when stocks come down towards the blue line. In fact, this is exactly what I did personally when I bought S&P 500. So the previous highs here from July of last year, at that time, that was an all-time high in July of 2023 last year. At around, this is S&P 500 ETF SPY, so it was like 4540 or so. And notice what happened. We came down to the green line, we bounced there. It was a small bounce. We didn't get quite to the top, and we kind of rolled over again and then continued lower towards the blue line, at which point I went ahead and I bought it, because that's where I want to be buying. I want to be buying on a relatively deep pullback towards the blue support resistance line. We can also turn on again exponential moving average. Sometimes it doesn't work. I wanted to show that it usually kind of bottoms around the 200, but not always. So my indicators actually provide much better exact levels where you want to be buying. So what we're watching for again is a pullback towards at least the green line, possibly a bounce towards the record highs. We may or may not get to the new record highs, and then if we don't get to the new records, then we might actually roll over further towards the further down towards the blue line. So at this point, again, we're just simply watching. I have paired my positions on multiple stocks that I had open. I'm still open for this position, S&P 500 ETF SPY, because I bought back in October, and my stop is actually at the blue line, but most likely I'll take more profits if or when we get to the green line. So far we haven't even touched this green line since basically November of last year. So again, waiting and watching, see what happens. Not anything unusual, nothing unusual is happening at this point. It's a normal garden variety pullback that we're watching right now. Junk debt, high yield bonds. So why do we care about high yield bonds? Here is a junk debt, high yield bonds on weekly time frame. And notice down below here we have what's called a correlation coefficient. So it's a correlation between S&P 500 and high yield bonds. And I have shown this chart in the past. It shows that high yield bonds and stocks exhibit a high degree of correlation. Notice that the correlation coefficient spends most of its time in the positive territory, so it means they move together, either up or down. Right now, junk debt is already by the green line. Okay, so it is leading stocks lower. Is it normal, abnormal? I think it's about normal. I don't really see anything terribly wrong with this chart for now. Right now we're simply treating this pullback as a pullback within a bigger uptrend, and bigger uptrend is still there. For S&P 500 to no longer be in a uptrend, it needs to drop from today's levels about 17% towards the blue support resistance line, towards the yellow support resistance line, which is currently around 42.50. So that's still ways to go. A lot can happen between the today and that time when or if we get there. So for now, again, we're treating this pullback as a pullback within a bigger uptrend, and we're looking for buying opportunities. But right now, I just don't see that many because the markets are still somewhat overbought by my longer-term measures. Let's move on to the dollar. Here's DXY, dollar currency index. Notice what just happened a few weeks ago, back in February of last year. Of this year, February 2024, right there, Tuesday the 13th of February 2024, we broke out into a new uptrend by closing above this blue support resistance line. We pulled back and bottomed right around the red support resistance line. Again, this was a very good sign. We continued to rally, another breakout here on the 28th of March, and yet another breakout here on the 10th of April with a follow-through today. So very obviously pretty strong move. So dollar moved back into an uptrend. What does that do for gold? So gold normally, when the dollar, so you notice this equation, XAU divided by USD, gold divided by US dollar. So if the bottom part of this equation, US dollar, like I just showed you, is getting stronger, bigger, shouldn't this currency pair continue lower? No, it's right now the opposite is happening. It's actually pushing really pretty strongly higher. Why is that happening? Well, we can look up the correlations between gold and dollar, and normally gold and dollar do the opposite. So this is gold in yellow and US dollar in green. And the correlation coefficient, notice it spends most of its time in the negative territory, but occasionally it goes positive. In other words, sometimes gold and dollar are doing the same thing. You know, in this case, it looks like they're moving in the same direction, up. So we got both gold and dollar moving in the same direction. Having said that, today's candlestick, notice that today's candlestick is very large amplitude. It also has a large shadow at the top here. It's a red candlestick, and the close is next to the lows of the candle. So all of those signs are pointing to the fact that this is a topping candle. I thought this was a top-end candle as well back in March. Clearly it wasn't. This one looks much more toppier. It's just bigger candlestick. So I think a pullback, or at least trading sideways for gold, could be quite likely. So this is another part of the fact of the potential buy the rumor, sell the news kind of business. So gold was being bought because of, well, people were panicking really, and they're still panicking because of multiple conflicts that are breaking out worldwide, bellicose statements by the world powers, as well as just a general instability pretty much in many places of the world, including obviously Ukraine and Israel, as well as Middle East, where in the Red Sea, where the attacks by the Houthis are still pretty much continuing, although I haven't heard anything of late, but there was a multiple attacks not so long ago. So overall, definitely fear, lots of fear. However, if I'm reading this correctly, I think fear is about to recede. So again, buy the rumor, sell the news. We're seeing a run up on quote unquote safe haven assets such as gold, as well as oil, to which I'll get in a few seconds. There's a big run up on gold, for example, and now perhaps we're seeing the fact that maybe this fear wasn't that warranted. It's not easy right now to say. Obviously, nobody really knows what's going to happen, what's in the minds of the world leaders, and what are they going to say next, what are they going to do next. But by and large, I think people are realizing that I think we need to calm down, and everybody just needs to chill. I think here in the United States, we finally have things like MJ, Cannabis, right? So it's traded openly now. I mean, it's not legal technically in all 50 states, but it's legal in many states here in the United States. So as an aside, everybody needs to chill out, use some of this cannabis, and maybe just relax. Because if we're going to continue down the same path, I think we can see just horrible destruction everywhere, from Europe to Taiwan to Israel to Middle East. There is no need for this, really. We just need to kind of get along. Quote unquote, we're all in this together, right? Can we get along or not? Make a comment. What do you think about what I just said? Oil. So looking at oil, crude oil. This one, let me go to weekly charts first. So weekly charts show that oil has failed to break below this bottom, like around $65 area on multiple occasions. For example, back in March, in May, in June of last year, again in December of last year, in January of this year, and finally rallied. So it rallied above the blue line, and so currently we're in a new bull market for oil. In other words, in my mind, when I say bull market, I just mean that I don't want to sell it short. Okay, I want to be looking for opportunities to buy oil. Now let's look at the daily chart. So there's that bottoming around the yellow line, and then kind of move higher and a breakout right there where I'm hovering on 1st of April, not a joke. And today, again, I'm looking at this candle, and this is a toppy looking candle. The bulls tried to push the prices higher, but the bears said no way, and then they closed the price near the lows. So this is a shooting star candlestick again. I think a pullback is definitely in the cards at this point. If the pullback, continues, I mean, if we get down to this blue line, which is at $83, and kind of bottom there, I would consider opening a position. But honestly, I don't know. I mean, what if the tensions die down? It's possible. What if we don't see more escalation between Israel and Iran, for example? Hopefully not, right? Hopefully something will change. Perhaps the leadership changes, and maybe the tensions will ease. Okay, that's also a possibility. we'll need to see in the next few days if the oil, if oil comes down towards this blue line around $83, towards $83, and if it sort of just bottoms there, then we might consider buying it. But if it doesn't, it just kind of slices through it, then who knows, maybe it will continue lower. So I am sort of, this whole buy the rumor, sell the news is quite possible, and especially with gold, it's way overextended. So again, make a comment, let me know what you guys are thinking. Other than that, thank you for watching until the very end. Please don't forget to hit the like button, subscribe to this channel, share this video, head over to MasterChartsTrading.com, click on sign up. As I already mentioned, I have added yearly services. So for example, if you want to get my indicators, so this lines on the chart, green, blue, red, and yellow, and again, you can trade pretty much anything under the sun. On pretty much most on any time frame. You just need to follow directions, and I'll give you all those directions. So those are the trading indicators. You can have them for TradingView.com. This is a TradingView.com interface. I also send out daily alerts and weekly members-only videos for members only. So those are the newsletters. And again, the best deal is to get both trading indicators and newsletters. And if you get them on a monthly charge, that'll be $59.95 per month. But if you get them on a yearly charge, you pay $599.95 per year, but that gives you 2 months free. So you're actually paying for 10 months. I'm sorry, you're paying for 10 months, but getting 12 months free. But getting 2 months free. So any of the yearly plans are like that. You get 2 free months per year. Alright, that's it for this week's recap. Again, if you have any questions, please let me know. Don't forget to like, share, and make a comment for the video. Thank you for watching. Have another great trading week. Bye-bye.